With the initiation of tapering, that's a clear sign that the U.S. economy is on better footing. Unemployment is going down, inflation is benign, but more importantly, at the corporate level, earnings are still very good. Cash sheets are very strong, leverage ratios are very low, and the ability for companies to continue to cover their interest expense is very high. So yes, the sustainable recovery in the U.S. Has a lot of positive points. Investors should take a look at high yield now because as a traditional asset class, it has always offered a very good source of income, but number two, it's offered a very good source of diversification. This is absolutely true in today's marketplace. The amount of credit risk that you're assuming by investing in the U.S. high yield marketplace is actually very low. Now that the Fed has finally started tapering, we don't anticipate any type of near-term knee-jerk reaction like we witnessed in May of last year. In fact, with the Fed tapering, that tells us that the economy is on better footing, that the unemployment rate is going lower, that inflation is still benign. Typically, that provides an environment where high-yield corporations, high-yield bonds, have done very well. That means that they're earning money, that they're creating more cash flow, the ability for them to service their debt and possibly get a credit upgrade is certainly higher, and so that is actually a very constructive environment for the high-yield bond market. We don't anticipate any kind of rate hike in the near term, especially for this year. In fact, we would continue to expect to see some kind of tapering on a measured pace as described by the Fed. If we take a look at what some of the strategists in the marketplace have said, they don't anticipate any kind of rate hike officially until maybe the end of 2016. Even without an official hike in rates, there's enough spread in the high-yield marketplace where traditionally and currently it has been able to absorb any kind of move in rates. And so therefore high yield continues to be a very good investment with respect to fixed income on a relative basis.